Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me, Shail Bhatnagar, our markets editor. Well, Indian stocks are in a corrective phase as the Middle East conflict escalates. But where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to remain sideways to weak on Nifty's weekly expiry day, as also a sharp spike in US 10-year yield to a fresh 16-year high triggers an equity risk-off trade globally. And it's time to be cautious in the cash markets too, as overall sentiment on the last street edges away from bulls. Offer for sales by promoters also point to excessive valuations in select PSU counters. Very good morning, Shail. It's a fresh Thursday morning. But if we talk about yesterday, the markets ended on a weaker note. Of course, amid escalated tensions in the Middle East.
Absolutely.
There was selling across the sectors, and Nifty ended 40 points lower to 19,671. Clearly, the Nifty's trend is down. So where do you see Nifty at this point in time, and what should be the strategy?
Good morning, Tanya, and Suprabhat to thousands of viewers who've joined us from across the globe. It's Thursday, therefore, the weekly expiry of the Nifty, and the Nifty now enters the last stage of October. In the last 4 sessions, it has lost about 0.8%, and yesterday's fall totaled about 140 points at 19,671. This was, Tanya, the day's low where the Nifty ended. The Bank Nifty also shut shop about 500 points lower at 43,890. So there's weakness creeping all across the globe, and it's not only our markets that are in negative territory. You see the US 10-year yield is again back on a fresh 16-year high. This kind of a number you saw last in November of 2007. We'll show you a lot of graphs that depict what's happening in the market on the equity side as well as on other asset classes side. And the reason simply is that the conflict in the Middle East between Israel and Hamas has taken a turn for the worse, and that has resulted in a global risk of trade. Nikkei is down. Of course, the Dow Jones index ended about 300 points lower. We have weakness across Asia, Tanya, and that weakness is now getting reflected in GIFT Nifty. The last time I checked, it was down about 90, 85, 80 points. So that is something that's creeping back into the Nifty. If you look at the 15-minute chart, if you look at how crude oil prices are tracking, look at how gold has moved up. All these will be visible to you in form of chart as in front of our screens, and this points to fairly tepid response from bulls when it comes to long positions. So Nifty at the moment is now below the 20-day exponential moving average, and that is the deciding factor between bulls and bears, Tanya. And this is the reason why I say that this weakness will so far persist when it comes to the Nifty in particular. So the bears are gaining ground, and you see, if you look at forget technicals, look at how earnings are coming in index heavyweights. There's a disappointment that's coming in from Wipro. Look at how HDFC banks were not received well by the market. In fact, HDFC Bank was the top loser yesterday in terms of index heavyweights. So this is the weakness that is creeping into the main index, and the fact that defensive counters, Tanya, have come back into focus. Look at how Cipla moved. Look at how Sun Pharma moved on the Nifty yesterday. So all these point to the fact that there is a defensive market in place. Bulls are looking to protect the gains that they have made, and it's the bears that are getting strength. If you look at the Nifty option chain, you have a strong support at 19,500, and the resistance, of course, is 19,800. So the trading range is moving lower and lower, Tanya.
Absolutely. Bears are gaining strength, and that was Nifty for you. But let's talk about Bank Nifty also, Shell. Bank Nifty also witnessed a sharp correction, and experts now believe that the index is in the process of retesting its previous swing low, that is 44,800, touched on 9th of October. So, what are now the fresh support and resistance level according to you?
So, Tanya, yesterday's fall was, something like 520 points at about 43,890, and all 12 of components that make up the Bank Nifty lost fairly substantially. The losses totaled anywhere between 0.3% to 2.3%. So high beta in the form of PNB and of course Bank of Baroda are slipping lower. Index heavyweights such as HDFC Bank ended at about 1523. The day's low was 1518. Look at ICICI Bank at about 946. The day's low was 939. So slowly but surely, the index is moving substantially lower, and of course the fresh expiry on the index started on Wednesday, but it's done nothing at all. If you look at how the index moved in trade yesterday, there was heavy selling pressure, and we are back again, somehow looking at 1st September lows thereabouts. It ended at its day's low 43,888 and well below the 100 DMA, and since it's already here, the 200 DMA is somewhere like 43 416. So while you've traveled all the way up from 46 to 57, if the 200 DMA is just 400 points away, it's always best to test it and then move up in terms of strength. If you look at how the options picture is on Bank Nifty, it again points to a substantial pain in the system. The most immediate support is at 43,500 in terms of strength, although you have something at 43,802 also, but I would imagine there would be a gap down, and that gap down will continue to gain strength. In terms of a good resistance, I see it at 44,300 and 44,500. So bit of a pain as far as the markets are concerned. Remember, we are headed into the festive season. 2 days from now is the weekend. Today is the weekly expiry, and therefore I would imagine that trade would be light. It would be choppy, it would be volatile, and there is no point buying the dip.
Okay, trade would be choppy. Keep an eye out 44,300 to 44,500 odd levels. That's the Nifty Bank for you. But now let's discuss F&O space as well, Shell, future and options. Lots happening there as well. So what are you looking at in the F&O space today?
So Tanya, purposely I did not send a chart or look at individual stocks, but the market is completely defensive. I would put my bet on Cipla. The counter rose 3.4% yesterday. It was the top gaining counter in terms of Nifty, and when your top gainer and the second top gainer is pharma, you can well imagine that the market has turned completely defensive. So it's Cipla and Sun Pharma, and in terms of Cipla, the open interest has zoomed actually more than 15%, and the volume actually had a huge breakout yesterday. Even in futures, the trade was 6x normally, and if you look at about 75 lakh shares were traded in cash as far as Cipla is concerned, and this is the highest since August of 8th. So that's how the move has come in. A very sharp increase in price. I would imagine that Cipla and Sun Pharma together would steady the index, but the fact is that both of them have very low weightages, but the money is moving into defensive counters like Cipla, like Sun Pharma, and like ITC as far as frontline counters are concerned. Tanya.
Okay, absolutely. Defensive stocks in action clearly. But let's discuss global markets as well. So, we are getting weak global cues from the markets, and U.S. stocks that ended lower yesterday, and S&P 500 and Nasdaq fell more than 1% actually. Dow Jones that was down 332 points. to 33,665 odd level. Nasdaq on your screen 1.62% lower, and S&P 500 1.34% lower. And gold, as you rightly pointed out, Shell, it hit its highest level in more than 2 months. So, what is now essential to track from all these overseas cues?
Tanya, I would just look at two charts. I've sent both of them to you. If the PCR can fire the 10-year US bond yield, you'll see it rising for the last four sessions in a row at about 4.949. This is the highest since I would imagine November of 2007, and November, actually September of 2007. And Tanya, I can honestly tell you, these were the 3 or 4 months that were really, really terrible. This was the beginning of the global financial meltdown in 2007, which started in the housing sector on Wall Street. So that's one very, very negative signal that's coming into the market. And of course, gold futures. You look at them at about 1962 dollars per ounce, and they are definitely headed towards $2,000 per ounce. I'd like to at this point of time read out a lovely quote that's come in from a gentleman called Ray Dalio. He's one of the finest persons as far as understanding the global cycle of investments is concerned. And he says, if you don't own gold, you know neither history nor economics. So this is how the global markets are at the moment. There is safe haven buying happening in gold, and you can see how beautifully the 200-day DMA has been taken out 5 or 6 days ago, with the sharpest and the most strongest green bar that you would see over the last 6-8 months. And this points to aggressive buying by institutions, by ultra HNIs, and by people who want to hedge their long-term equity portfolios. So this is what is happening. Gold is rising. I am going to tell you that crude oil will also go above $95, $96 a barrel in the coming few days, just as this conflict deepens in the Middle East. So this is how I read charts: 10-year yield, gold, as well as crude oil prices.
Okay, absolutely. Well said, Shell. And, clearly it's the defensive sectors that are defensive stocks that are in focus. But I want to understand from you that which are the sectors that you are bullish on at this point in time? Because we saw clearly, pharma and auto participating in yesterday's and supporting the markets a little bit. But what are the sectors now to watch out for?
So, Tanya, for the immediate rotation of money, which is, weekly picture, I would look at the Nifty Pharma Index. We've seen an all-time high of 15,773 somewhere on 10th of August, and from the looks of it, how Cipla and Sun Pharma moved yesterday, how Glenmark and Aurobindo Pharma are positioned, I would imagine that high beta and high quality stocks in the pharma space will now gain momentum. So pharma is one space. I would also look at the Nifty FMCG index, stocks like ITC in particular. There is sectoral rotation towards ITC. If you look at the all-time high of the pharma index, it was of the Nifty FMCG index, it was 54,410 on July 21st. That was also the previous high of the Nifty that particular day. So from then on, there has been a consolidative pattern, and both these indices, the Nifty Pharma and the Nifty FMCG index, will now attract fresh money into them. The money will move from high beta, which is the PSU banking sector, the metals sector, the railway stocks, the things that we saw move up very sharply. Those will see profit booking, and money will go into consumer FMCG counters. Tanya.
Okay, absolutely. And any sectors that one should avoid, because you were pointing out, Shell, that offer for sales by promoters that also point to excessive valuations in select PSU counters. So would you like to elaborate on that?
Yeah. So, Tanya, like I said, you've been in the morning show for about 4 or 5 months, and I have repeatedly said that government PSUs are the baskets to make supernormal money. You've read so many headlines about them. I would imagine that now easy money is made, and time to book some profit. There are festivities in the next 4 or 5 days, 10 days, 15 days. You need to spend that money in the actual economy. बहुत पैसा बन गया उधर, तो वहाँ से निकाल कर आपको ख़रीदारी करनी है. And shopping is the best stress buster. Just go and spend that money that you've made in government PSUs, railways, defense counters, banks, tire stocks, metal companies. I can name so many sectors. We have a risk of trade in equities unless we see an exit as far as the Israel-Hamas problem is concerned. If crude oil goes above $95 a barrel, Tanya, a lot of people would be in a huge amount of cash.
Absolutely. And any sectors that one should avoid, Shail, at this point in time?
I would imagine PSUs is an area where we'll see strong profit booking. That is something that you should not at the moment think in terms of longs. The charts on the daily basis are extremely overstretched. Look at MMTC. This was the market dialing about 3-4 days ago. Strong profit booking happened there over the last 2 or 3 trading sessions. Look at HUDCO. The government and promoters of all hues and colors are coming to sell equity in this kind of a market, Tanya, because they know that the valuations are overstretched and they know their businesses internally. These numbers look very difficult to maintain in terms of price to earnings, price to book. So it's a little difficult at the moment to suggest a long trade unless you're looking at pharma and FMCG, Tanya. And even there, just index heavyweights, Cipla, Sun Pharma, ITC. End of story.
Okay, Cipla and ITC. And by the way, we have, ITC and Nestle and HUL, Shell, and all these companies will be reporting their numbers. And now I think it's time to welcome our guest on the show today. We have with us Mr. Abhishek Jain, who is the head of research at Arihant Capital. Mr. Jan, thank you so much for taking the time out and being with us here on Business Today Television. So let's understand from you now. We have these escalated tensions in the Middle East, and markets are volatile at this point in time. So what should be the right strategy according to you?
Good morning, ma'am. Thank you for inviting me. So our thought process is right now we have seen a substantial rally in the market from maybe close to a mid-cap rally of close to 30% in last 6 to 7 months. We've been advising last 1 month our investors to book some profits. The valuation, there are many valuations where we are seeing a lot of valuations are very aggressively at this point of time. Like we are not finding value. It's hard to find value in many counters. Wherever we are finding value, so we believe, like as Mr. Bhattagar said earlier, I think there are like some FMCG companies or maybe a few pharma also. Like I believe there is a very selective buying is there. One sector which we've been liking right now, where we believe it should bottom out in this quarter. The margin should bottom out in this quarter is the agrichem space. So we are telling our investors to book profits. We have seen a rally in some of the railways, defense, and industrial capital goods, or maybe in the banking side. We have seen a substantial rally, so it's time to book some profits and keep some money on the table. And we have one more important event which is there in December, is the election, state election outcome. So that is obviously the investor should be looking forward to have in view afterwards, because this is an important event.
Okay. Good morning, Mr. Jain, and it's a pleasure to host you on Market Today at Business Today Television. Good morning to you and to your clients. Abhishek, Arihant Capital is one of the finest stock pickers as far as long-term growth is concerned, and buying distressed but quality assets is concerned. What is your research team looking at the moment? Any stock calls that you can share with our investors who can buy it for the longer term in their portfolio?
So there are two, three companies where I believe like today I am expecting I'm just giving an example. Volta's results are out. As per our discussion with the management and channel checks are there right now. I think Voltas is something consumer durable space. Voltas has been continuously losing market share, but on the positive side, their project business should bottom out in this quarters. So one thing which and also on the consumer durable side, the margins as per our channel checks, one of the large competitor have stopped giving discount by the end of September. So hopefully things will improve and the festivity should work well for now. EC is not more no longer only a one quarter phenomena. There are substantial revenue coming in the Q3 and Q4 also. Maybe not that big. Also, if project business started doing well, we are positive on Voltas. Something we feel after the results, if any weakness. Same thing with in agrichem space also. As I mentioned earlier, also the channel checks have suggested there's been an inventory piling up which was there in last quarter has been clean up in this particular quarter. So obviously you may see a top line growth of decent with a stable monsoon this year, whatever we have seen. So there will be an inventory cleanup is there in the China, and also like some of the inventories like for the products like glyphosate and other things have cleaned up. I'm just giving an example. The China level inventory was glyphosate was 90,000 ton and it's close to now 35,000 ton. So which and the prices have moved up from the top. So on the YOY basis, still down, but still on the overall basis, there has been a healthy trend right now. So we think why not looking at the companies in the agrichem space which are not dependent on the election outcome much on any election outcome, and the valuations are very attractive. So after results, we have been telling our clients to add agrichem space like UPL insecticide, even Sharda or Dhanukas of the world. And second important thing, the formulation, the companies having the formulation side portfolios should do better. So Dhanukas of Rallis of the world should do very well.
Okay, so this is an underrepresented sector in the bullish phase of things. It's the agrochemical space. I got two or three names. UPL you mentioned, Dhanuka Agritech, and Sharda Cropchem. These are the three that I could make out. Abhishek, anything that you would add to these names, and if at all, could you rank them in order of importance in terms of buying? Where would you put, say, 25% money? Where would you put 10%? Where would you put 5%?
So as per our model portfolio, we have increased our weightage. We believe this quarter will be again there will be the margins pressure will be there for most of the companies, because the last leg of inventory cleanup you'll see the maximum pain is there right now. So companies which are gradual player and a global player, I believe Q2 again the top line can be good, but the margins are expected to remain weak. We are expecting an EBITDA of 1480 odd crore, which is lower than market consensus for this particular quarter. But I think things will improve substantially. So I would be a buyer in UPL post results, whatever the level was there below 600. If you get an opportunity, this stock is available at 7-8 times its FY25 uh, earnings. So I think that is something where you one can definitely have a look. Second is Dhanuka, a very strong player in the formulation space and doing very well right now. And we have seen formulation companies doing much better than relatively than the technical spaces. There. Third will be again insecticide or Rallis or whatever you take it right now. Rallis is something also they've completed a major capex recently, and things should augur well for these guys also. The Sharda Cropchem, I think they may see one more quarter of pain, but now whenever you see the Europe recovery, you'll be seeing Sharda doing very well right now, and they are largely an asset light player. So I think they'll be doing decent. So I any recommendation which I think is like you can take a base quantity and should wait for the Q2 weakness to build up large positions on those stocks.
Okay. UPL and Rallis. I'd like to put in a word at Rallis. There was a block deal that happened between Rare Enterprises and Tata Chemicals. Tata Chemicals is the parent of Rallis India, and they bought back 5% stake from Mr. Junjunwala's portfolio. That's one. And of course, UPL, that's been the second worst performer on the Nifty over a 1 year period, down about 17-18% on a 1 year basis. So these are two stocks that you need to look at. Rallis pretty much hasn't done much over the last 4 or 5 years, and perhaps that is where Abhishek's how should I say, expertise lies in buying out pain and then looking at substantial gains. Okay, ladies and gentlemen, we have the first tick that is coming into the markets. It's a 175 point cut on the Nifty. We are below 19,500. Of course, this will settle down. That's how it is. It's actually getting worse, and this number at the moment stands at 206 points lower, 19,475. In terms of index heavyweights, let's look at how HDFC Bank is doing. Remember, this was one of the sharp underperformers in yesterday's trade, and at the moment HDFC Bank is flat at about 1519. Hindustan Unilever is down about 1.9%, 2500. Axis Bank is down 2%. I don't believe these numbers. They will settle towards the better at 971. Let's look at Infosys, down 1.65%, 1416. Let's look at Reliance, 1.5% lower, 2295. At the moment, there is pain all around. Bajaj Finserv, 1.5% lower, 1608. This is how FNO is stacked up in terms of index heavyweights. Selling in Axis Bank, Hindustan Unilever, Infosys, Reliance. HDFC Bank, for a change, is flat. That's a bit of a breather for Bank Nifty. 1518 is what I see. Let's shift focus to FNO stocks beyond the index heavyweights, and let's look at where we see pain and where we see gains. Let's look at gains first. Okay, IndusInd Bank, remember this stock is what we've discussed last week. A lot of strength coming in, 2% higher, 1450. Bajaj Auto, 2.5% higher, 5275. Indus Tower, 1% higher, 189.40. Polycab, 0.5% higher, 5370. That's how prices are ticking. Nifty is now above 19,500. A bit of a strength that's coming in, but still down 100 points. In fact, more than 100 points. Let's look at losers in FNO. Okay, M&M, 2.5% lower, 1530. Power Grid, 2.5% lower, 201. Wipro, 2.8% lower, 396. So IT is going to take it on the chin because of the kind of earnings Wipro has reported. Let's shift focus to NSE 500 and let's look at the gaining list. Suzlon, 31, now flat. Bajaj Auto we've discussed. I'd like to see IRB Infra, 1.6% higher, 35.25. Biocon, 0.5% higher, 239.70. And not much happening here as far as gains are concerned. We'll again shift focus back to our analyst panel. Nifty at the moment 126 lower at 19,545. Let's get Abhishek on the screen. Abhishek, in terms of pharma, what would be the top pick at Arihant Capital?
So on the pharma side, we are positive on domestic plays. I'm not saying you buy it today, but there are something mid-cap domestic plays like RPG Life Sciences, which has posted good set of numbers. Also on the which are largely in the specialized onco space right now. There's a decent portfolio right now. Also on the Sun Pharma is doing very well. They are doing the specialized portfolio at this point of time. There are some whether the event happen or not, that is more important. But I think Cipla is something which is doing well. I think Cipla should be having definitely look at, and there people are talking about there's some corporate event. Whether it's happen, I don't think so. There will be an impact on the core business of the very good pipeline on the inhaler side right now. I think it should be added this thing already. The Pitampur hangover was there with the company, I think, which has been through in last 2-3 quarters. But definitely something I will be buyers in Sun Pharma. Glaxo looks MNC. On the MNC side, Glaxo and AstraZeneca looks interesting. Even so, we believe some of the MNC stocks now one can definitely have a look. Now the valuations have come down substantially for many of the stock after the COVID side. So these three, four names on the large cap side, with IPCA and Sun Pharma are top pick on the stocks. Rest all we have right now neutral to negative view on the companies. Maybe they may see some rallies from, but as a portfolio journey, but
Right.
our view is more positive on Sun Pharma and Cipla of the world.
Okay. Cipla and Sun Pharma, of course, we've discussed on the technical charts as well. We're waiting for Mr. Rajesh Palvia to join us. Let me just give you a feel of how prices are now stabilizing on the Nifty, although it's a deep, deep red cut that you see on the index. IndusInd Bank is 2.5% higher, 1451 on the Nifty. And look at how defensive the markets are. There are at the moment just three gainers on the index, and they are IndusInd Bank, Bajaj Auto, and a green tick on Cipla, Apollo Hospitals, Tata Consumer. So you can logically think that it's the defense of the market that's coming in the forefront, which is FMCG and pharma. Coforge net profit is at 180 crores versus, I didn't see that number. So Coforge is something to look at. Let's just sort of drill down into Nifty FMCG and see which are the stocks that are looking fairly good. And where do I see the index? Okay, here it is. Nifty FMCG. Okay, the gainers, let me give you some good names. A whole host of companies. Imami is doing good, 1% higher, 50870. Dawat Foods, a percent higher, 178. There's nothing much to talk about. We'll wait for the markets to look at. There's a company called Bajaj Consumer, which you should look at in terms of sheer underperformance that has been seen over the last so many years. But this is something that's coming back fairly sharply. Bajaj Consumer at 240, 290. This is a stock that you should look at in terms of a long term portfolio. Anything that catches your fancy, Abhishek, in the FMCG space?
Our FMCG space, our thought process, like Bajaj Consumer, we have the way you are talking about right now. They've been again now the crude have started picking up, so which is not positive for them because the raw material is LLP. So we may see maybe this quarter good performance right now, and they've been managing their portfolio very well. So their non-hair oil, light hair oil portfolio they've launched has started picking up. I think we find this company very interesting, and we have a coverage on the stock. So we think even this can be look at this thing. Apart from this, some of the companies in the sectors like HULs of the world, our thought process in the FMC side on overall basis, they may be a defensive buyer, but and there's a lot of premiumization happening at this point of time, especially in the southern markets. But some of the companies are likely to face challenges also, because as the private label business from the some of the companies in the what you call the online platform or have started picking up right now, so there will be challenges also. So they many companies can be a trading buy but not a portfolio. We don't find, especially on the large cap side, they cannot be a much more value in many of the stocks. I think one should definitely look at and again now crude have started picking up, so they'll again see some pressure on their margins going forward also. So maybe you may see this quarter may be decent for some of the companies, but we are not that positive on the FMCG side, despite being valuations are at attractive level.
But
But
what about
cannot rule.
ITC? Yeah, please go ahead, Abhishek.
So ITC is something where I believe ITC can be a good bet on overall segment. But ITC, the problem is now it's no longer a value play at this point of time. We have seen a rallies from 200 odd levels right now. There will be inherent risk of which is the core portfolio thing is there right now, and FMCG business the growth has been slightly stagnant. However, the play can be the demerger of their hotel business, which they are doing it right now. Apart from this, the other two, three businesses also, the management has also given a hint of next 2, 3 years there'll be a paper business, or maybe in some of their businesses they'll be doing the same kind of restructuring. If this is going to happen, that can be a value picker. ITC, I believe, at this level is a no price, no trade zone. Maybe a 440, 430 can be a good buying opportunity, but 470, 480, this would be like a trading opportunity. You could take it this way.
Okay, absolutely. And talking about some of the IT names,
Okay,
it's true that, yeah, please go ahead, Shell.
No, Tanya, you continue with Wipro, please.
Yeah. So I was saying that large IT, names, they have disappointed. Like Wipro saw its revenue decline for the third consecutive quarter. But what about mid-cap IT, Abhishek? Stocks like Birlasoft and, KPIT Tech, they have done really well. What are your thoughts on mid-cap IT?
Some of the companies are doing very well, but I'm just giving an example. We have a coverage on Builders of 2 quarters back. The stock was languishing around 260 odd rupees. So the stocks have almost doubled from the last 6 months. So I think there is hardly any value in many of the stocks right now. I personally think there are many companies in the sector right now are available at right now at this point of time. But the companies which will do well, like Zensar and all these things, should continue to do well. But I think you have to see on a stock specific basis rather than this thing. But we are a buyer in Buildersoft. We are seeing good traction. And one more thing on the Buildersoft. This SAP has already announced they'll be transferring their platform to cloud by FY25. If this is going to happen, this is the Buildersoft is one company which is going to be the large beneficiary on overall basis.
Right. At 542, Birlasoft is positionally looking at its all-time high of somewhere like 560, 580. We had checked that number yesterday. So this is something that you need to keep in mind. Tanya, the closure prices are there. The pre-close is in front of us. The Nifty is opening at somewhere like 19,545. That's what pre-open tells us. And this is at the second support. So there's a gap down of about 125 points from yesterday's close, and yesterday was 140 points lower than what was we saw on Tuesday. So lots and lots of weakness creeping in as far as markets are concerned, and that's a pain point. We are starting 0.5%, 0.6% lower in trade. I don't think so that there is a buy on dip in place. So let's see where it sort of settles. Mr. Palvia, Rajesh Palvia joins us, Head Technical and Derivatives Research at Axis Securities. Good morning, Rajesh. Welcome to Market Today on Business Today Television. Your two picks quickly before markets open.
Good morning, Shailji. Good morning, everyone. So I think Bajaj Finance is looking weak, and the kind of breakdown which we have witnessed in the previous session, we believe that furthermore follow-up selling we can see in the today's session also, and possibly stock may slip further towards 7,800, even 7,750 kind of level on the downside. So one can go short in Bajaj Finance future with stop loss of 79.60. And the second stock where we feel that furthermore selling pressure or some profit taking we can see in today's session, that is L&T. L&T is struggling to cross its multiple resistance zones since last couple of trading session. And in the previous session again there was some profit taking was happening. So I think some more pressure we can see in the L&T prices. Overall structure is bullish, but for trading perspective I think 3,000 is the level where L&T can come down. So one can go short in L&T also with stop loss of 3090.
Okay, so two negative calls coming in, and remember Bajaj Finance and L&T have been two of the strongest stocks that have rallied very, very sharply over the last 2 or 3 months. L&T, one of the finest corporates that we have in terms of Nifty, and one of the initial stocks that was set up as a part of the original Nifty. All-time record highs on this counter, and Mr. Palvia is sort of suggesting a technical sell because of a steep rise in valuations as also prices. Rajesh, what looks good to you in pharma?
I think from pharma, one can look at Sun Pharma. That stock is looking promising, and I think if its stock manages to cross 1160 zone, then possibly this rally can extend in Sun Pharma. So Sun Pharma, one can look at to buy and accumulate in the decline. 1120 is the stop loss to buy and accumulate this stock. So overall, from pharma space, Sun Pharma, Lupin, Arvindo Pharma, Dr. Reddy, these all stocks are looking promising at this juncture.
Right. Let's look at markets immediately. Nifty's opened at 19,560, still down 112 points. All the shorts that were in place in yesterday's trades are now getting vacated. Therefore, you see a minor uptick on the Nifty from its low of 19,543. Let's see how long it sustains. It's a little difficult for the Nifty to overwhelm bears at the moment. Index heavyweights first. Okay, what is Infosys doing? Flat 1439. What is HDFC Bank doing? Down 0.8%, 1507. Reliance down 0.7%, 2305. ICICI Bank down 0.8%, 936. And let's look at Axis Bank down 0.8%, 985. How about FMCG? FMCG ITC is flat 450. What about Hindustan Unilever? Down 0.8%, 2527. Okay, Nifty is now digging lower. 19,531 in front of you. It's about to break the second support, down 132 points. There is a 300-point cut on the Nifty Bank, 43,570. The broader NSE 500 is down 114 points, 17,230, and the IT index is down 80 points, 31,526. It's looking to be a very, very weak opening. Apart from that, let's look at the FNO stocks which are not index heavyweights. Okay, L&T Mindtree 3% higher, Bajaj Auto 2.5% higher, 5278. IndusInd Bank is getting a lot of buyers, 1450, 2.5% higher. Polycab Coforge in the green, about 0.5% and 1% higher. There's nothing much happening there. Let's look at top losers. Bandhan Bank, despite a phenomenal set of earnings, the counter is the top loser in FNO, down 3%, 230. Oracle Finance 2.5% lower, 4018. So IT is taking it on the chin. Wipro post earnings which were terrible, 3% lower, 394. It's a fresh 52-week low here. Let's look at Dabur and Syngene, 1.5%, 2% cuts on this particular space. Let's look at PSUs, which was super high beta. Let's see what's happening there. We have 8.5% cut on STC India. Flat move on Kudremukh Mines, 434. Actually, GMDC is looking up, 1.5% higher, 403. Let's avoid that. Let's look at the defense space, which was again very high beta. And let's look at the losers here. BEL 1% lower, 135.45. Cochin Shipyard 1% lower, 1022. And one very quick look at the markets before I go back to Rajesh Palvia. Okay, Tanya, we track 19 indices. All 19 are in the red. The top loser at the moment is the Nifty Metals Index, 1.5% lower, 67.63, and the realty space 1% lower, 601. Rajesh, what are you seeing on the markets? What looks bad to you?
I think Shailji, sentiment is a little cautious at this moment as we have broken again the important support area of 19,600. So I think furthermore follow-up selling we can see in the market as we've discussed about the Bajaj Finance. I think stock is heading towards its target on the downside. Even L&T, the quality large cap stock is also getting the supply pressure. So I think some sentiments are still on the weak side. So I think those stocks where we have seen, a good amount of rally in last couple of weeks, there would be again, profit taking can be initiated at the higher level. So I think a lot of stocks are now breaking down their near-term support area. So I think Tata Motor is again, after the opening, again the quality large cap stock again getting some supply pressure. So I think if Tata Motor remains below to 670, 672 level, then possibly this may also attract some profit taking, and then we can see some downward momentum towards 645 also in the Tata Motor. Again, on the financials also, Muthu Finance is also looking weak at this moment. Supply pressure is already there since opening. So I think if it stocks trades below 1465, then 1265, then possibly this stock may also take some hit towards 1220, even 1210 on the downside. So I think if market not able to cross again 19,600 level in today's trade, then possibly some quality stock will also start slipping from their recent high.
Okay, absolutely. Good morning, Mr. Palvia. This is Tanya joining in the conversation. So let's look at NBCC. The stock is supporting the markets actually, and it's up around 2% as we speak. And the stock has been on a roll on the back of auto wins as well. What are your thoughts on NBCC and any stocks that you like from the PSU space?
I think NBCC is still on the bullish side as we look at the weekly setup. Stock managed to give breakout of its flag kind of formation on the weekly chart, and the kind of accumulation activity which we have witnessed in last couple of weeks, that clearly shows that if stocks continues to hold above 62 level on a weekly closing basis, then this stock may scale up to the next target of 72 to 75 in the short period of time. So I think one should hold NBCC at this level, and 72 should be the stop loss to buy and hold the NBCC. 74, 75 we can see in the near term basis. So that's the view for NBCC. At this current juncture, some of the stocks are recovering, and I think some buying interest is taking place. So I think one can look at the stock like REC at this level. Stock is already trading at almost near to its all-time high trajectory. Some profit taking, mild profit taking was there in last couple of trading sessions, but I think overall structure is looking on the bullish side. 284 is the immediate support area for the stock, and if stocks holds those levels, then I think REC may show some buying interest, and maybe we can see towards 294 to 296 target during the day.
Bajaj Auto is also, by the way, up 5%.
Let's get
So, Bajaj, yeah, please go ahead, Shell.
Let's get Abhishek into the conversation. Abhishek, what do you like? The markets haven't opened in a fairly decent manner. Anything that attracts you?
Ma'am, sir, we are recommending our clients to add some of the IT stocks. We think like Wipro is something where people may not like it, or Tech Mahindra is something people may not like it to add. We thought this can be a good opportunity when the stocks are at some 11, 12 times its forward earnings right now at this point of time. Earnings there has been a restructuring is going through in Wipro at this point of time. I believe the benefit should be seen in the long term right now for the company. They have cut down their guidance for this year from minus 1.5 to 3.5%. But still on the valuation side, the stocks is at still 11.5, 12% at this point of time. The order book was decent, and I think FY25 will be a decent year for the company. Same with the Tech Mahindra. I believe Q4 is Q2 is expected to be on a weaker side, but the new CEO is coming as building first base for the financial services of the business, which was not the focus area for the company for last so many years. So which we believe can be a very interesting, and a lot of new joinee from the Infosys and other companies have joined the company right now, and the benefits should be seen going forward. And again, that telecom, the core business which is there right now, I believe the spending should pick up in FY25. There is a lot of talks are going on at for the company. I think these two looks very interesting. Birlasoft is something we continue to remain positive. We believe any weakness in the stock should be taken as a good long-term opportunity. TCS is also, with the buyback is there right now, I think should offer a good opportunity for the investors to add in to the stocks right now. So these three, four names which we are telling right now are clients to add. Hello.
Yeah, so I was saying Bajaj Auto is up 5% as we speak. And, the company posted numbers yesterday and it reported a standalone net profit of 1,836 odd crore rupees, an increase of 20% on year-on-year basis from 1530 odd crore rupees. So I want to come to you, Mr. Palvia, for Bajaj Auto. What do the technical charts suggest for this particular counter?
So I think the reaction is there on the positive side for the stock, and now stock manages to give breakout of its previous swing high of September, and I think the kind of breakout which we are seeing on the daily as well as on the weekly time frame, that clearly suggests that now stocks holds above 50 to 70 level, then possibly this may further may continue further more upside towards 5400 level in the continuation of this gap up opening. So I think one should hold on the position as stock is already shown good traction even despite of opening on the higher side. So I think now one should trail their stop loss towards 5330 and hold the position for the target of 5450.
Okay, Bajaj Auto at the moment, the top gainer, not only in the Nifty space, but also across the entire F&O space. Strong earnings coming in, and that's getting reflected both in open interest as well as the price action that you see. Okay, the Nifty at the moment is at 19,551 in cash, still down 120 points. We've had the first 10 minutes of trade, and it's not looking good. Bank Nifty down 250. At about 43,640, and the IT index bleeding 0.5% at about 31,437. There don't seem to be any great trades to look at least on the long side. But let's look at the counter cyclical move as Abhishek is suggesting. He says he likes Wipro. Okay, Rajesh Palvia, I'll request you to please take a look at the charts. One, the earnings have been terrible, and earnings overall for index heavyweights in the IT space like TCS and Infosys haven't enthused investors at all. In fact, Infosys cut the guidance for the remaining part of the financial year, and Wipro is gap down to about 394. Today's low is 391, and today's high is somewhere like 394. Rajesh, to you first, and then we'll get Abhishek to discuss his views on Wipro.
So I think there is still underperformance by the Wipro, and across all time frame stock is in bearish zone, and after this today's gap down again, now stock slipped below to its 200-day moving average. So 398 400 is the critical juncture as of now on the higher side. Until the stock not again manages to hold those level on a closing basis, I think some supply pressure is likely to be there. Still, we believe that stock is already in the downtrend, and even in the recovery phase also stock not able to sustain about to all its near term short term moving average, that is 50-day 100-day all moving averages stock has given breakdown in recent past. So I think there would be we can see some more pressure on the prices. So on the downside, if it's a remain below the 400 level, then possibly stock may go down towards 385, 380 zone. That's the next major support area for the stock. That is very critical for the stock on the downside, because if we look at the longer term time frame, also the 380 is around. The stock has formed the base at around June 2023. So I think if it's remain below to 400, then possibly 380 could be the next level where we can see Wipro in the coming trading sessions.
Okay, to you, Abhishek, what do you like in Wipro? You know, the earnings have been terrible. Yes, you can bottom fish, but Wipro has been a
No,
long term underperformer. How do you justify this view?
So I have seen like in the Wipro, if you see the management commentary on the call, they've been facing last quarter was largely dependent. Last 2 quarters they've been facing in Europe right now, and especially on the financial services on the manufacturing side. The management has on the call has said that now the focus is on largely on the winning the build large ticket deals right now. So there has been some concentration in the portfolio also right now, which they are talking about, which can help the company to win. And the management is already, as per our discussion and whatever we have said, talked right now, there's a lot of good things happening, and they have talked about Europe will is expected to bounce back going forward. If there is going to be a bounce back, I think it may take one more quarter, but I think should see a revival, and what we are paying is more important than I would see. These weakness can be a good opportunity. Maybe it can come down to 370, 380 levels, but definitely a stock to be on a radar. And what I think for an investor with a 2 year horizon, that can be a very interesting entry level, giving them an opportunity to enter in at a very attractive level right now. So I believe Europe recovery will play a key part for the Wipro revival right now.
Okay, absolutely. Got that, Abhishek. And coming to you, Mr. Palvia, let's pull up fact stock, and it's the top gainer from the mid cap space. And the stock has actually more than doubled, I would say, in the last 6 months. So, what do the technical charts now suggest for this particular counter, Mr. Palvia? And as we speak, the stock is at 732 odd level, 0.8% uptick there on this particular counter.
So very strong rally in last a couple of months, and looking at the overall structure, stock is enjoying almost its all-time high trajectory. So overall structure is bullish for the fact some profit taking was there in the previous session, but still stock is holding well above all its breakout levels. So I think even in decline, 700, 690 is the good support area again to re-enter in the stock on the downside. I think stock has already moved up around 30-35% in current week. So if some cool off action comes in the stock and some profit taking drag the stock prices towards 700 or 690 level, where again trader can look at to buy this stock on the downside. So we will wait for some corrective move to again re-enter in the stock. Our stop loss is at around 675, so we will wait for some decline to buy the stock.
That's a view that's coming in on fact. Now, there is some kind of a reversal that seems to be taking place, at least in some frontline stocks. And it's the mid cap IT which is taking it away. Tanya pointed to Birla Soft. 1 second. Let's look at nuclear software. This is a very how should I say, undiscovered kind of a stock. We had the management some time ago post their earnings. 1449, it's a gap up plus a very, very strong breakout. Mr. Palvia, to you first. How does it look to you, nuclear software?
So I think now, Shelji, there is no trading opportunity left in the stock, as stock is already at upper circuit now. So I think buyers won't be able to get any position at this moment. But the breakout is very strong, and the stock has formed a consolidation since last couple of weeks, and now this breakout is clearly suggesting that this really can extend further in coming trading session. So those who have already bought, they can hold on the position. Their stop loss now should be at around 1380, and I think if it stocks not again slips below to 1380, action is coming in the mid cap IT space. I think Persistent is also another stock where one can look at the current level. I think Persistent is also looking promising, and the kind of buying interest which we are seeing since opening, and stock manages to cross above to previous day doji candlestick pattern. So I think some buying traction we can see in the Persistent also, and possibly this stock can move further higher towards 5900, 5920. So one can look at Persistent also. Software is also looking promising on the chart, so one can hold on their position for Nucleus Software for further rally in the coming trading session.
Right. There are few things in this world which defy understanding, and one of them is mid cap IT valuations. Be that as it may, bhav bhagwan hai, jo samne hai, we'll have to accept it, and that's how the rallies that are shaping up. So Coforge, Persistent, L&T, Mindtree, L&T Technology Services are all looking up and looking better and better, and we have very little hope that's coming in from frontline counters like Wipro, Infosys and TCS. These are the mysteries of the market that we deal with on a daily basis, and we must accept them and move on without commenting on why they are happening. The Nifty meanwhile is dipping further, 134 lower at about 19,536. It's not looking good for the index. The second support level, which I hoped would hold on, hasn't worked pretty well. The advanced decline ratios are now worsening. In the F&O, you have just 17 stocks which are in the green, 167 in the red. Let's look at the broader markets. At the moment, as far as the National Stock Exchange is concerned, 1275 stocks are in the red and just 600 in the green. So the advanced decline ratio is 1:2. How about the Nifty 500? Just 100 stocks in the green, 400 in the red. So 1:4 kind of a gain ratio that you are seeing. All 17, 18, 19 indices that we track are in the red. The Nifty itself has just 6 stocks in the green, 44 in the red, and it seems to be getting worse. 19,520 for the index, down 150 points. Anything on the option side, Rajesh Palvia, that you would suggest? Remember, today's of course the weekly expiry of the Nifty, a sharp downtick, and we will be entering the last phase of the October monthly expiry from tomorrow.
So I think Shelji, on the short side, the opportunity is gone now, because we have already seen 150 point cut, and now we are approaching to very important and crucial support area of 19,500. So I think shorting opportunity is not there in the market at this moment, because it will be a very high risk trade if we go on the short side. So I think we will wait for some pullback action to initiate again short. So I think if Nifty comes towards 19,560, 19,570 zone, then again we may think to again initiate some short position, or we may take some put option of 19,550, but not at the current price. We'll wait for 40, 50 point pullback from the this current level, and then we may think to short or to take put position of 19,550. Our stop losses are now defined at 19,630. That is the important critical area now for the Nifty on the higher side. So if we comes closer to 19,630, then we may again initiate the short position for the downside of 19,500, 19,450.
Okay, it seems to be worsening for the index. Now we have the day's low, and it's exactly 938, which means that 15 plus 18. The second candle will be formed somewhere like 9:45 on the 15-minute thing, but it looks bad. Let's look at the overall Nifty chart at 19. 520, we have a low of 9th October in front of you, and subsequently the low for October is actually 19,333. That's still 210 points away, but it's not looking good at all across the board. Tanya, what are you watching?
I think, Shell, we should talk about these FMCG names that will be in focus today. And Mr. Palvia, if you could quickly do a technical check when it comes to ITC. The company is likely to report a healthy 10.5% growth in its net profit. Of course, led by sales of cigarettes, price hikes in FMCG products, and strong demand in the hotel segment as well. And also, if you could tell us the levels for Nestle and HUL, I mean, what should be the strategy ahead of the numbers?
So I think ITC is in a broader consolidation range. I think since last 7-8 weeks, stock is trading in very narrow range, and stock not able to give breakout of its consolidation range. On the higher side, the major supply zone for the stock is at 460, 462 level. If at all stock crosses this 462 level on a weekly closing basis, then possibly we may see some buying traction in the ITC, and this stock can show good up move towards 480 or 485 zone. Overall structure is bullish, but some consolidation action is taking place in the stock prices. So I think one can buy and accumulate a stop loss on the downside is around 438. 440, 460 is the consolidation range. So I think this is the opportunity again to buy and accumulate the stock, as overall structure is looking bullish for ITC at the current level. Even if we look at the another, FMCG stocks like Nestle, we have seen very strong rally in last couple of week, but in last 2-3 trading sessions, some profit taking is taking place in the stock on the Nestle. But overall structure is looking very strong for Nestle. If you get any opportunity to buy this stock towards 23,000 level, then I think one can look at to again re-enter in the stock, and your stop loss you can keep around 22,700. Again, on the Nestle, once the stock manages to cross about 23,550, 600 zone, then this stock may have potential to really further higher towards 24,000 level also. So from FMCG pick, yes, one can look at Nestle for short-term trading perspective also. This stock is looking very strong on the near-term, short-term setup. Even if we analyze the other FMCG stock like HUL, Hindu Unilever, now in last 3-4 trading sessions, some profit taking was there. Stock is now slipped near to its 50-day moving average. Stock is overall structure is on the weak side for near term as well as on the short term setup also. Some recovery has taken place, but still stock not crosses above it's a 2580, 2600 level. That is the very important and challenging level at this moment. So I think until the stock not crosses about 2600 level, I think one should avoid HUL also at this moment. I think in today's session, the flavor of market or the buying interest is taking place on the mid cap IT stocks. So I think for traders, mid cap IT is the space where one can focus. We discussed the persistent. I think now this stock is trading at all. It's a day high trajectory. Even one can look at Dixon, Tata Elxsi. These kind of stocks are showing some traction in today's session. So I think the flavor of day is a mid cap IT. So one can make some trading bets on the long side for mid cap IT in today's session.
Well, it takes a very brave man to go against the trend as far as the broader markets are concerned and then punch in a buy trade. But mid cap IT is mid cap IT, and we've seen fairly strong momentum based moves coming in, especially in a couple of stocks that we discussed, chiefly nuclear software. Of course, Persistent has been one of those fantastic outperformers all through last year, in fact all through the past 3 years that we've seen. But my bravery is not limited to this kind of a move, so at least I'll stay out even from asking questions as far as mid cap IT is concerned. But if you have some of these stocks, they are not to be sold. let's just end that conversation there. But overall, Tanya, it's a painful weekly expiry for the Nifty. We are already down 133 on the Nifty, about 0.7% lower, and it's not looking good apart from Bajaj Auto. Let's look at how the Nifty stacked in FNO. Okay. Wipro is the top loser, 4% down. Abhishek wants to buy this. Hindalco is down 2.9%. Tata Steel, JSW Steel are the next set of two losers. So metals not only is the top losing index, but it's bleeding very heavily within the Nifty space, which is the top traded counter. In fact, when Rajesh was here yesterday, he did mention IndusInd Bank on the long side. Rajesh, what is happening on this chart?
So clear outperformance is IndusInd Bank. Some of the private banks are still, despite we have seen a sharp cut in Bank Nifty and other banking stock, this stock is consistently holding 1400 mark. I think our belief is that till stock is not giving away below 1400 mark, I think there is a potential to move further higher towards 1500, even 1540 level. So I think outperformance is likely to be there in the IndusInd Bank. So I think one should hold on their long position, though there is a some profit taking from the higher level in today's session also, but still the stock is showing good strength. Once the market start recovering, so I think this is the stock where we can see a good outperformance towards 1500 to 1540 level in the continuation of this uptrend which we are witnessing since last couple of weeks.
Okay, let me just point to you some interesting facets on IndusInd Bank. I'll rustle up another software for it to get loaded. But Tanya, over to you for the next 5 minutes. Just give me a while. I'll give you some good data on IndusInd Bank.
Absolutely, Shail. And Mr. Palve, let's talk about some of these, metal counters. Of course, they are not participating in today's rally, and it's a cyclical sectors. But any picks that you have, especially a buy on dip strategy for any of these names from the space?
So I think when we have negative global cues and these kind of geopolitical tensions, so I think these metal stocks always react on the negative side of the trade, and the same is happening. Though we have seen some of the metal stocks have done well in recent past and shown good traction on the high side, but again since last couple of trading sessions, since this geopolitical tension escalate, that metal stocks again slip below to their important support area on the near term chart. But still, we do believe that Jindal Steel and Power is one stock where we are bullish, and we believe that once this selling pressure settle down at certain point, then I think one should look at to buy Jindal Steel and Power in the decline. So buy on dip strategy one can adopt in Jindal Steel and Power towards, if you get any opportunity to buy this stock towards 660, even 655 level, where again one can re-enter in this stock. And again, in the pullback, 700 is the immediate supply zone. Once the stock crosses above 700 level, then Jindal Steel and Power can show some outperformance in the metal pack, and further upside we can see towards 730, 740. So that stock we like from metal space. Even from mining space, NMDC is looking very promising. We have seen very strong buying interest in last couple of week, and the stock has already given a breakout. Though a market is under pressure, so some profit taking is again taking place in the stock. But again, we look to buy this stock in the decline also. 156, 155 is the good level again to re-enter in the GMDC. Your stop loss should be at around 152. So NMDC is also buy on dips kind of stock at this moment.
Okay, absolutely. Got that. And now it's time for us to actually shift our gears to the corporate side. And we have with us Mr. Suniti Bhatt, who is the MD at Ceylon Exploration Technologies, and who will tell us more about the quarter gone by. First of all, thank you so much, Mr. Bhatt, for taking the time out and joining us here on Business Today Television. And congratulations, stellar set of numbers coming in for the second quarters. So, firstly, take us through the key highlights of the quarter gone by, and also if you could tell us about the guidance when it comes to the production going forward. I mean, what's the guidance for FY24?
Thank you, first of all. Good morning to all of you, and thank you for having me on this show. We did have a good second quarter. I think our second quarter average production sales were around 680 barrels plus oil plus gas equivalent, which represented around 33% increase quarter on quarter. I think our profit also has soared. I think we nearly doubled our PAT, and our EBITDA also showed a pretty healthy growth. Uh, I think the key we have been telling the market is once we took over Celan nearly a year back is we will look at creating value and finding more potential within the Celan assets. So we are seeing the results because of a sustained drilling campaign across our fields that we started sometime at the beginning of this fiscal year. I think we are seeing the results come through, and most of the results are pretty much in line with expectation. So, from a guidance perspective, we are still maintaining that we will be somewhere between 750 to 1200 barrels of oil equivalent per day by the end of this fiscal. So, we expect this to be a lot stronger year compared to the last year that has gone by.
Okay. Good morning, Mr. Bhatt. Welcome to Market Today, as also Business Today Television. One of the most exciting times for companies, oil extractors such as Celan, to be in the market, given the geopolitical tension that we are seeing in the Middle East, and that has impacted crude oil prices fairly strongly. Share with us and our viewers, how do you see the next 6 months to 1 year in terms of how the company will perform? As far as the stock price is concerned, ladies and gentlemen, what you see at 440 in front of you is one of the best prices since 2014. So we are seeing a 9-year high on the stock on the back of a global rally in crude oil prices. Mr. Bhatt, over to you.
So, thank you. I think, look, the global geopolitical thing that we're seeing recently, but also before that, Ukraine war and pretty much the rebound in economic activity post-COVID was generally supporting robust commodity prices in terms of oil and gas. I know we're currently seeing to the north of 80 or even $90 per barrel, but typically, we are in a rally, at least in this industry, when we have stable prices around 70, 75. And we are seeing those will be there for some time to come, given the lack of investment that has been in this sector, generally across the world, not just out in India. So we expect this commodity to stay strong, at least for the next couple of years. And therefore, anybody who has development plans or capital spend plans that are going to result in immediate production within these 2-3 years is going to benefit from it a little bit more than the peers, whereby probably the production growth might not come in at the same time. So the focus for us within Celan will be continuing development of the Celan assets and also creating more a wider portfolio away from the Cambay Basin that we have within Celan, so that we can actually within the next 3 to 4 years really create a much larger production platform than is currently with Celan.
Mr. Bhatt, when you look at your numbers and you talk about exploiting or sort of sweating your assets a bit further than the previous management, please share with us what are the top 4 or 5 assets that you have? How much of fresh capital will you deploy to make them more effective? And what is the output that you are looking at from these assets 6 months down the line or 1 or 2 years down the line?
I think the key assets that we have within Celan are called Bakrol, which is our cornerstone asset. It's the largest asset we have. And we have 2 other smaller assets called Lohar and Karjisan. I think second quarter's uptick also is due to the fact that Karjisan restarted production. It was shut field for some time. I think when we started this journey in terms of reinvesting within the Celan assets, we had around 200 crores on our cash on our balance sheet, and we decided to put that money back into investment and create more value for all the stakeholders. We expect that we will exit this year, as I said, within 750, 1200 barrels, but more or less we will also be back with 200 crores on our balance sheet. So effectively, if you look at it, we went into this year at around 500 barrels of oil equivalent per day with 200 crore cash. We're going to exit there with exactly this more, give or take, same amount of cash, but a much larger production base that's going to create profits and for the years to come. As far as the next year and all is concerned, we are basically integrating all the new information that we have found during this drilling. And probably sometime in Q3, we will come back to you guys with a guidance on what the next year is going to look like. But because the results have been positive, results have actually confirmed our belief in Bakrol's lateral extension as a reservoir. So we think it is on an upward journey. Having said that, we have also announced a merger with, or the board has in principle approved a merger. We are currently looking at that versus with our other company called Antilopus Energy, which has much larger reserve base compared to what our Celan assets have, and is also in different basins within India, different producing basins or what's called Category 1 basins. So we actually, over the next 2-3 years, see a much larger combined entity that will be at least an order of magnitude higher in terms of production and hopefully revenues as well as profitability as we go into next 2-3 years.
Okay, absolutely. Point taken, Mr. Bhatt. And talking about the merger with the Antilopus Energy only, so how will it contribute to the company's portfolio going forward? I mean, what's the revenue potential after this merger?
I think the okay, I just lost the connectivity for a bit. But look, the right way to look at it is we are creating much more robust portfolio because our current portfolio, which is in Celan assets, is primarily in Cambay Basin. Our Antilopus Energy has or discovered fields across Mumbai offshore, Mahanadi offshore, a little bit KG onshore, and also Assam Arkan Basin, which are all prolific basins. So in our business, we try to have like what you guys do, you work on a portfolio because once you work on a portfolio, you are minimizing the risks that that you can deal with, because we have been so. The overall, we'll get a much wider reserve base. I think Celan has more or less around, give or take, 4 to 5 million barrels is what we think is the 2P number in there. Antilopus, as we have already disclosed, the 2P numbers are of the order of 50 million barrels oil equivalent. So effectively, the Celan shareholders are going to get an exposure to 10 times the reserve base that we currently have within our assets. And 10 times reserve base, really, I mean, if all things stack up the way we want and everything goes in the direction and the shareholders approve it, we are definitely in the process of creating a mid-sized oil and gas company which has substantially larger production than what we have today in Celan within the next 4 years.
Okay, absolutely. And Mr. Bhatt, what's the guidance that you're working with when it comes to the top line growth? If you could share with me.
We have not given any guidance as of yet. That's why I don't want to give prematurely any. I think the only guidance we have given is 700 to 1250 volumes as we exit this year. I think we are very confident we will be towards the upper end of that guidance as we exit this year. And we will continue drilling in the Celan fields, particularly Bakrol and Kardistan. And that should create a strong base for us going forward. And in 2-3 years with Antilopus assets coming into the fold, I think the productions will be much, much larger than what they are today.
Mr. Bhatt, at the moment you are debt free. Are there any, plans to take on fresh debt to fund any kind of capital expenditure that might be in the pipeline?
I think we are definitely going to look at various avenues of capital raise. That is one of the avenues, particularly because post-merger. Apart from in Encelopus Energy and also in Ceylon, our anchor investor is Oaktree Capital, which is a large financial investor across the globe. I think with them also on our fold and others as we go through, we will look at a combination of debt and probably an equity raise as we go to fund the various growth assets to create the company that we have been aspiring to over the next 5 years.
Okay, so Oaktree Capital, the one owned by Mr. Howard Marks, is it?
Yes, it is identified primarily by Mr. Howard Marks. Yes, that's the fund.
Wonderful.
That's our.
With that, yes. Okay. With that, Mr. Bhatt, we'll call it a day. Thank you so much for your time that you spent with us, and we hope that more oil gushes out from your fields, and the debt-free status remains, and the excellent earnings that you've come up with become a habit for life. Thank you so much for your time.
Thank you very much. Thanks for your good wishes.
Let's hope for good days ahead as far as sale and exploration are concerned. Tanya, over to you. Nifty now picking up. 19,500 is 19,580 is with the bulls, and let's hope they have 19,600 with us fairly shortly. So a nice bout of short covering happening on weekly expiry day. The second support that I had mentioned, 19,540, seems to be working pretty well for the index, and let's hope we've seen the worst behind us between a 140 point loss yesterday and a 125 point downtick in the beginning. Tanya.
Absolutely, Shail, and I think good news is that 19,500, this level is still intact on Nifty. Let's see how the action, pans out, but it's going to be a stock selective, stock specific day. Some of the auto names clearly in the top gainers list, and of course Wipro on the back of poor Q2 show. It's the top loser for you. But with that, it's time for me and my team to wrap up this edition of Market Today. Also, thanks to you, Shail, for sharing, all these wonderful insights and valuable data with us. With that, it's a wrap, but lots more coming up for you. You don't have to go anywhere. Just stay tuned, and many thanks for watching.
Well, hello and a very warm welcome to Business Today TV. I am Chetan Bhutani. Tata Motors is amongst the few cars who has bring out the loudest cheer for the Indians in the festive season, a bit coming up of the Harrier and the Safari. And I am joined by the Managing Director for PV and EV at Tata Motors, Mr. Shailesh Chandra. Mr. Chandra, thank you so much for joining us. First question, sir, we're in the midst of the festive season, the 90-day festive